Hello and welcome to another beautiful episode of Awabah Nigeria. On today's episode, we'll be talking retirement and pension fund. I know you think this might be boring, but I assure you, this is definitely not boring. This is Awabah Nigeria. We have a lot to talk about, and I would be talking to Mr. Tunji Andrews. He is the co-founder of Awabah Nigeria. This is a must listen because the future, tomorrow, we're not just living for today now, we're living for tomorrow, we're living for next, and we're living definitely for the future. We will be talking retirement and pension plan. And for me, for someone like me, I don't have any of that. And I was like, okay, it could be fun to talk about it. Of course, it's also not fun to talk about it because somehow somebody said it's going to be a very boring conversation. But I said, no, not with Mr. Tunji. It's always different every time I have a conversation with you. So I hope that we prove them wrong. People look at their children. For me, for example, I always say that, let's start from perception of people when it comes to retirement plan. And this one is something that I've heard people say. They say that older folks look at their children as retirement or pension plan. Like, I took care of you, so now is the time for me to, for me to get something in return. I'm taking care of you, so you can take care of me. Why do you think that we have that rule of thought?
So I don't. It's not just us. It's the entire African continent. It's an African mindset, and I dare say it's a world concept. But in more developed countries, it's not as pronounced as it is in developing economies. It is the same in India. It's the same in parts of China. So it's a human phenomenon where you generally believe that you invest in your children so that your children will eventually take care of you in old age. This is not something you can fight, by the way, especially if you talk about people like us. We can't fight it. What we do is that we try to educate in such a way that people who know better actually can do better. But from the perspective of it, have you noticed that every single Nigerian language has a prayer for your children so that your children will take care of you when you're old? Where I come from, they'll say, exactly, your children will take care of you. I don't know what it is in Igbo, but I know that there's every single language that has a prayer for parents, especially when they're doing something for their children, that your children will, benefit you in time. So it's not something you can fight. It's just something you enhance and help people understand that instead of just looking at it from this small prism, there's a big perspective to look at it from.
So, but do you think that parents actually take care of their children so they would enjoy? I mean, everybody wants to enjoy their kids when they are older and they are sort of weak. Do you think that parents actually take care of their children and for that advantage?
So let me point it out to you this way. Every single one of us, right? We're doing well. I want to believe that we're all doing well. But the question is, and the real conversation is, if you want to look at how difficult it is to do a lot of things today. We all see inflation. You know how much you buy a bottle of Coke, you know how much you buy meat in the market. Just think about it from this perspective, right? You have a child right now, and the child is maybe 2, 3. What will be the cost of living when that child is in their 40s and their 30s, late 30s and 40s, when you'll be older and they will be taking care of you? It is utterly unfair to expect them, with all the costs they're already bearing, to be able to take care of you. Now, this is the reason why in the developed economies, you see that it is less prevalent that children are taking care of their parents, generally because it is expensive to live. Even rents, cost of food is just very expensive. So children have been able to shrink that, weight off their shoulders. It will eventually happen in emerging economies like our own. And I expect that it would happen to the next generation, that is our children, who would find it too difficult to pay their own bills, take care of their children, and still take care of their parents at the same time.
All right. From your experience, how do Nigerians view pension or retirement plan? Is it something a lot of us jump into?
No, no. No, absolutely not. I can tell you because we're on the field selling this product on a daily basis. But how it works is simple, right? You can't tell people pensions. I mean, you're telling them to save. Think about it from this perspective. I'm telling you, give me your money. I'll keep it for you for 30 years. And after 30 years, I'll now give it back to you. Nigerians will say, no, did you do that?
Not just that, actually. Is it like give me your money or give me a part of your money?
Either ways, either ways you want to look at it from the perspective of it's about give me your money. But you see, this is what we do at Awabah. We basically do it from a perspective of we educate you on how you can multiply money, how you can better improve your money and better manage your money, and tell you that these are the many things that you can do to take care of you in the future. But one of them is also pensions, which is what we sell. So why don't you put a little aside and then start growing? But we don't say pensions, we call it long-term ajo. So everybody on the streets of Lagos, Abuja, Kano, wherever they are, understand the concept of alajo, the person that comes with a notebook under their shoulder, and then they take small money from you, write it in the notebook. That's how the person knows ajo. So we tell you that it is long-term ajo, but the difference between this and the normal ajo is that this one you get about 10% every year. Ajo doesn't give you any interest. In fact, Ajo takes a part of your savings away from you. But this gives you 10% interest. By the way, our savings, you can withdraw 40% of your money at any point after the first 3 months of savings. So it's like that 40% is still there for you to be able to use to do whatever you want to do with your business, but the 60% waits for you to retirement. But there's even more. And this is why we come in. So we tell you that we can now offer you multiple things that can make life better for you. So we're now adding micro insurance to the product so that you can be able to have HMO. You can be able to take care of yourself when you are ill. If you are sick, there's small stipends that come after the third day you are hospitalized. So a lot of people, when they're in the hospital, they want to rush back to work. So we say after the third day of you being in the hospital, you can start getting a small stipend to take care of yourself while you're in the hospital. You've already paid for the hospital insurance. But also, we're now also giving small loans to people who have been with us for a little while. We're looking at the possibility of being able to, even create jobs for them. So you see, it's an ecosystem. We don't come from the perspective of pensions, because if you say pensions, most people will just run away. So we come from the perspective of we're trying to give value. We're trying to help you plan for retirement. We're trying to make sure that your day today is good, but your tomorrow is also sorted. And that is the perspective we come at it from.
Mr. Tunji, I need to tell you this. I need to tell you that I feel like you've covered all my questions. I'm sorry. I have questions in my head, but okay, but the way you're saying it, all right. But I have more. And so, what's the difference between pension and retirement fund?
It's the same thing, but we are slightly different from the normal pension fund. So micro pensions is created under the Pension Reform Act. So it is regulated by PENCOM in Nigeria and is managed by pension fund administrators. And I know that you probably want to ask me another question that I'm going to answer right now, but yes, forgive me. So let me go ahead and answer.
Just go ahead. Just go ahead. Strike away.
So what the government realized a little while ago is that in the whole Nigeria, we have about 70 million people in our labor force. That is people who are able to work, available to work, and ready to work. Now, of these 70 million people, only about 9 million of them have retirement savings accounts. That is pension savings accounts. And that is because they work in formal structured environments. So they work in a bank, they work in a radio station, they work in a TV station, they work in as doctors. Those formal structures have retirement savings accounts. But you know what? That leaves another 61 million Nigerians who are Uber drivers, cameramen, graphic artists, engineers, hairdressers, all those many people in our economy who do not have any retirement savings. Now, there's something we say in Nigeria we will call daily 2K.
Yeah.
You go out and you earn your daily 2K. The problem with daily 2K, it's daily. That means if you can't go out, you don't earn the 2K. Now, there is one particular point in your life that you will not be able to go out and earn that daily 2K.
True.
That is when you are aged. So the regulator realized that we need to take care of all these 61 million people, or else they're going to grow up, become 60, and we're going to have to still find a way to take care of them. Imagine 60 million aged people in close to poverty. And the older you get, the more you need medical attention, the more you can't take care of yourself, the more you need medical homes. A lot of the children will have to, it's going to be chaos if we don't have any retirement planning. So the regulator decided, let's create this fund, and they made the pension fund administrators go and push it. But here's what happened. The pension fund administrators are built as investment banks. So it's a problem for a lot of them to, also deploy resources to the retail market. So what we did is simply we came to the PFAs and said, hey, can we help take this burden off you? This load is light. Let's make it lighter for you. So we took it off them. And what we do is we basically go to the market, get the customers, and then bring them to the PFAs. So basically, when you sign up with us, you are basically signing up to one of the PFAs we are partnered with. As of today, we've partnered with 11 of the 22 PFAs, and there's negotiations to be able to partner with more, but we are basically working in collaboration with the PFAs. And the one that you might be thinking about, the biggest one, as a matter of fact, we're in partnership with the top 3. I think the top 5, actually, we're in partnership with the top 5. So that is of 22, so that we are able to give as much options to our customers as they possibly want.
We have so many pension policies in Nigeria, and one of them is the national policy on pension. Can you explain that?
All right, so that basically guides how your country looks at pensions as a whole. So the national policy on pensions is like, I'm trying to see how I could explain it. So it's like the rule book. This is all we're going to do with pensions. This is the direction we're going to invest pensions in. This is how the country is going to, invest pension funds. Can you have state pensions? Can you have federal pensions? Can you have the private pensions? So the policy itself explains the entire scope of what pensions are in Nigeria. And it is that policy that gives, that comes down to the granular level to allow us to do what we're doing at this particular point.
Okay. We've talked about Nigerians many of us, we need the urgent 2K and the daily 2K, as you said. So now that we have that, because it's actually a problem that we have to if you don't go out, you don't eat. And also in America, they also have the same thing, because many Americans don't have savings. So it's not just a Nigeria disadvantage or a Nigerian factor. It's something that happens all over the world. But today we're considering Nigeria because this is where we are from, and we always have to look out for our people. So now that Nigerians don't earn a lot, and not a lot of us are educated to work in corporate firms, so we should talk about personal pension plan. We have the corporate one. Now let's talk about the personal pension plan. Now you said Awabah does the daily ajo. If I can't do the daily ajo, I can drop that, because out of that 2K, imagine giving Awabah 500 naira. How do I take care of the things in the house? How do I do that?
All right. So it's fantastic that we've been able to think of all these things. So first of all, let me explain how we collect contributions. By the way, it is not necessarily daily. We do it as you have money. So if you want to do it daily, fine. If you want to do it weekly, fine. If you want to do it quarterly, also fine. Guess what? If you want to do it once a year, it's up to you. Guess what? If you skip 2 years and you come on the 3rd year return, it's your money at the end of the day. We have no say in it. It is your money. And the fantastic thing about it also, if you have so much money today and you contribute 100,000, and tomorrow you only have 200 naira to contribute, nobody is going to stop you. Because guess what? It is your money. So it's really up to you. And that is why we do a lot of education to help people understand, because your contribution is as much as you understand what you're saving for. So if you really don't understand it, there's no incentive for you to do it. So that's why we do all the education, the conversations, to be able to make people understand really why they should be saving and why they should be putting that money aside. So it's flexible. Think about it as like your bank account, your normal bank account, right? You know, the bank doesn't come to meet you and say, why have you money in your account? You have no money. The bank, it's not up to the bank. It's about you when you have money. This is the way your pension, your micro pensions fund is. So if you have a lot today and you don't have anything for the next 3 weeks, nobody is going to stress you. No penalty, nothing.
Look, talking about no penalty again, Mr. Tunji. I know I'm really coming at you, but one time
I like it.
My friend called me and he said, "Oh, he worked with this very quiet, okay firm, and he says he wants to take out of his pension fund. I think he has about 200,000 naira, so he wanted to take something." And I was like, I don't know how to go about it. Is it possible to take, if he has 200,000 naira, is it possible to take 80% of that money? I mean, you have so much responsibilities at the end of the day, so you're trying to salvage some situations by, because it's my money at the end of the day, so why can't I take 80% of it? Is it a problem?
Yes, it is a problem. Because your friend is on the RSA plan. So the RSA is the corporate pension system. The corporate pension system, you only get your money under two circumstances. One, you've lost your job for more than 6 months. And then the second part is when you retire. So you cannot touch your money. It is the law. There's nothing we can do about it. I don't have much say in that place either. But you see, on the micro pensions.
You just told me. You just told me that it's your money, and you just have to go to the bank
to get your money. The bank would not say, "We haven't seen you come deposit some money." So why is it so different with pension funds?
All right. So for the RSA, I honestly don't know. I've asked the same question myself, and we don't have an answer. But you see, for the micro pensions that Awabah pushes, you can withdraw up to 40% of your savings at any point in time. Just like your friend having 200K saved up somewhere, if he had opened a micro pensions account, he would have been able to get access to 40% of that. He would have been able to get 80K of that 200K at any point where he wanted. He wouldn't have even needed to call you. All he just needed to do was either come to us, use the app and make the withdrawals, or he could go to the pension fund administrator and collect the money instantly. So you see, it's a different regime, but you see, there's a reason why the pension fund administrator is keeping the money for the long term. So the regulator is just finished conversations about people being able to use their pension funds as equity contribution for mortgages. So in Nigeria, if you want to buy a house and you don't have all the money up front, you go to a bank, they'll say, okay, bring 30% of the house, 30% of the cost of the house, and then we'll loan you the rest. So instead of you bringing 30% of your loan, the fee, you could just take your pension funds, they will just calculate it, take the 30% of your pension funds and put it as collateral. While it is still in the pension fund, this is the fantastic thing about this, by the way, because if you give the bank 30%, they just collect that 30% and they don't do anything with it. You get that money is gone from you. It's with. But this one is in your pension fund. It still continues to accrete interest. It still continues to accrue interest. It doesn't leave your pension fund. So it is 30% on one hand, and then you can get your house. So for me, that is probably one of the reasons. And there are things that the pension regulator is working out in the future. But again, if your friend had a micro pensions account, they would have been able to withdraw 40%.
Why is micro pension fund account, why is it different from the usual pension funds that we have?
Generally, because they realize that, the people who are most likely to use the micro pensions are your everyday people on the streets, and those people usually need money for their business from time to time. You get, so you have a shop, you are selling, you're a hairdresser, probably the rent is gotten due. I mean, if you look into your pension fund that you can still take 40%, why not? I mean, it makes solid sense. So they were able to create that small guidance because these people are in the informal sector.
Okay. What is the interest rate on pension accounts and the interest rate on micro pension accounts?
It's the same thing. Guess what? They are run by the same exact pension fund administrators. So, for instance, Stanbic has the RSA, Stanbic has the micro pensions. ARM has the RSA, ARM has the micro pensions. All of them have both. So they are the ones that determine the strategy of the funds dependent on them. Now, to the specific interest rate, it varies from year to year depending on how the year itself did for the investment climate. But over the last 10 years, it's been an average of about 10%. If you look, there are some years it went to 14, 17%. There were some years it came to 7%, 8%, but over the average of the 10 years, it's been about 10% every year.
Yeah. So you would you advise because I have, let's talk, okay, this is quite personal, right? So let's talk about it. So if for example, if I have a savings, a fixed deposit account in the bank, would you advise I just put the fixed deposit cash in a micro fund account? At least that way, maybe the interest would be much more than having it in the bank. What do you think?
Absolutely. I cannot even argue with this because, except of course, you need the money in urgency, right? And you need the whole entire money. That's the only reason why I'll say maybe keep it there, because the interest you get from a fixed deposit is ridiculous compared to what you will get on a micro pension or on a pension fund. And I just told you it's an average of 10%. There's no fixed deposit that is going to give you that on a regular return. Any bank you go to is going to give you, I think it's about 3% or 4% or so, something ridiculous. So, I mean, it's you can look at the numbers. This is not even me arguing. And anybody watching this, you could go to the PenCom website and you see on the PenCom website the result over the last 10 years from every single PFA in the country, and you can be able to judge for yourself at the returns that are available to you.
So I have a few more questions, but just give me a minute to just take a very quick break. I know it's very, very quick break. Hello?
All right. Yes, I'm here.
We are back, and I really want to know how pensions really work. The organization that manage pension funds, how is the handling done?
So it's a very efficient system. It's actually very well thought out. So you know that prior to 2004, when the Pension Reform Act was created, we've heard stories about our parents trying to go and get their pensions. They won't be, they won't get it. They'll be queuing. Some people would die at the point of registration. That was the government pension system. It's not in any way connected to the new pension system. And a lot of fraud happened in the previous pension system. There's still an ongoing case recently where somebody is being tried and all of that.
Yeah.
So any sensible person in trying to create a new pension system needed to put all those things into place, to think about it well, so that this kind of thing doesn't happen again. And the Pension Reform Act basically thought about everything. So one of the first things they did was to separate the person that holds the money from the person that invests the money. So the people that speak to you, the Stanbics, the ARMs, the Power Pensions, the Leadway Pension, all those companies, right? They are the pension fund administrators. They are the one that markets to you and also are responsible for investment strategy. But you see, at no point in time does the money touch their hands. It's very weird, right? There's no time in this whole conversation does the money actually sit in their bank account. There's at no point. Guess who holds the money? They are called pension fund custodians.
Okay.
The word custodian basically explains it. So they hold it in lieu of the administrators. The pension fund custodians are usually part of banks. So a bank, the four major ones in Nigeria, Access, Zenith, First Bank, and UBA. So those four have custodians. So they're usually part of banks. So they hold the money. At no point does the PFA hold the money. So the PFAs are really like accountants, if you think about it. All they own is just a red number, push the number here, push the number there. They never hold the money. The PFCs hold the money. Now, for you to get paid your pension fund when you've gotten the time you retire, 3 people have to agree that you actually should be paid. The administrator that collected the money from you, the custodian that is holding the money, and then PENCOM, the regulator, who issued your pension ID at the beginning. So there's a lot of checks and balances in the system to make sure that no fraud happens. So every time you actually pay your pension contribution, and everybody that has paid their pension contribution will bear me witness, they never pay to the PFA. They always pay to the PFC, that's the pension fund custodian, in lieu, and then they just balance out and let you know that your money has been credited. So that is the way the system has been able to work to make sure that people's money is safe at every single point in time.
The factor is I am Nigerian and I have trust issues. So PFC, do you think that these custodians, they can actually claim bankruptcy? Do you think it would ever happen?
So that is why there are only 4 as of today, and they are the biggest banks. All the banks I just mentioned to you are tier 1 banks in Nigeria, which means that they are capitalized over 25 billion. First Bank, one of the most solid banks in the country. UBA, one of the most solid banks in the country. Access Bank is the second biggest bank in Nigeria, and then what's the last one? Zenith. So, Zenith. These are all tier 1 banks in Nigeria, over 25 billion capitalization. But you also know that there's an added caveat to it also. The way that the pension regulator has created the system is in such a way that your money is guaranteed. The money you put into your pension fund is guaranteed. There's nothing like, we invested in wrong places, your money will go. There's nothing like that. Your money is guaranteed. Whatever happens, your money is guaranteed. And in fact, this is a problem a lot of the investors, people who are saving, have. When we try to explain to them why PENCOM doesn't allow the PFAs to invest in very high yield investments, we explain to them that you can't have both together. So they will be saying, why are you investing in this thing when you can go and invest in crypto, when you can go and invest in US stocks? And we're like, no, we must invest in things that your money will be guaranteed. But unfortunately, with those kind of investments, they don't give you big returns. Do you get? The returns are always, it's just going small, but your money is guaranteed. So it is those kind of investments that work, because the regulator knows that we are all Nigerians, that we all have trust issues. So they would rather get your money is waiting for you than try to go and pursue big returns. And when you come, they will now start telling you, you see, it was because we were trying to double your money that we now put it inside one chance. It has now gone.
50% investment.
You get those kind of things. So the regulator is very strict about it. So whenever people are saying on Twitter that, look at my money, if these pension funds, if they have gone to put it inside this would have come out. And we are looking at them like, you need to pick one. Do you want your money to be guaranteed when you retire, or you want us to go and put it in these things that it can go? Because there's no, you get my point. So those are the issues, and it's about creating trust in the system to make sure that whatever happens, your money will be waiting for you when you retire. Everything we can now do on top of it is now Jara, but your money will be waiting for you when you retire.
Yeah, so we've had situations in Nigeria where pension funds that belong to some workers are misused by or stolen. Let me even use the word stolen because by some ogas, and often they are always pension funds, as you said earlier. In situations like that, what happens? I mean,
So you see,
is there a
there's a
recourse
problem with
if the
that.
pension funds have been mismanaged? Is there a recourse?
So you see, there's a problem with the government pension system. And that is why this new pension system was created. The former pension system is a pension system whereby every year the government has to sit down and allocate how much they are going to pay pensioners. It's not like the money was sitting somewhere before. So like the new pension system, that your money is kept somewhere. Everybody is looking at it. In fact, all Nigerians know how much is in our pension savings as of today. It is a public number. As it grows, there's an account on it. There's public account. Everybody knows, oh, it has grown by so percent. This is how much it is. It's public knowledge. The government pension system, on the other hand, is about how much the government has every year and how much the government can put aside. Now, the government can now put aside money for pensions, and the governor or whoever or the ogas can now say, we need to buy machines. Let's use those pension money to quickly buy machines. There's nothing stopping it. Unlike the new pension system where there are laws, like I told you, the different people holding the money, the three different institutions need to agree for the money to, anything to happen to the money. Do you get my point? So the old pension system is a problem, and I think we should just scrap it as a whole. But unfortunately, a lot of people are invested in it. A lot of people are inside it. A lot of people have even retired and expecting to continue to get their pension. And I don't know how we're going to work with it, but the old pension system, I don't want to say it has failed, but it is looking like that. It is getting very close to that failure point. But, it's sad that even my father is one of those people that is in the old pension system. But there's no money saved anywhere. So the government, and these days, government doesn't have money. Government is going to borrow. So when government borrows, will they now come and use to pay pensioners of yesterday when they still have salaries to pay today?
And to think all those countries who used to loan us money, they already closed their WhatsApp now. We can't even reach China. What the heck?
You see, I'm telling you, it's a problem. They too, they have their own problem. You'll be bringing your own every year. You need to go and solve your own issues.
Let's not forget that if the pensioner dies, how would they locate their families?
So when you're signing up to micro pensions or the proper pension system, you put up your next of kin immediately. Now, because it is your money, remember it is your money, it is the right of your family to collect it, or your next of kin, whoever it is that you put as the person to collect it. But normally, there are conversations around it. It is not just straight line. You have to provide the person's death certificate and you have to provide the person's will so that there's no counter conversation in the will. But if there's no counter conversation, the form goes to the person's next of kin, and then the person collects the money either as a lump sum or continuously like the person was collected when they were alive.
What if there was no will?
No, it goes to the next of kin.
Okay,
so a will overrides those next of kin conversations. But if there's no will, it goes to the next of kin.
How would you advise our generation right now and generations to come to plan for their retirement?
So I'd say I always point it from this perspective. Don't think about the word retirement. Think about it from the perspective of where do you want to be when you're old?
I want to be.
I'll tell you where I want to be. And see, that's exactly what I'm talking about. So I want to remain in Nigeria. I want to move to Jos, Plateau State. I've already seen the area in Jos, Plateau State that I'd like to retire to. I want to live on acres of land in Jos, Plateau State. I want to be able to live off the land. When I mean live off the land, I want to be able to plant my own food. I want to be able to eat the poultry from my own land. I want to be able to eat the pork, the fish, everything from my own land, even the beef. I want us to be able to kill it and be able to do it on my own land. this is not a easy project. The place I'm living would be very close to the airport, so I'll be able to, if I want to travel, I'll be able to leave immediately. Also, I want a situation whereby I will be able to afford to be able to get a plane to take me out of Port Harcourt, Plateau State, whenever I want to. But you see, all of this acquires money. It requires money, if you get my point. So my planning today is towards that goal. So instead of just wishfully thinking, and as they always say on the streets, I'm a lowy, I'm a lowy. One day when I'm rich, instead of doing that, I have decided to plan every day towards that goal. How much do I need in say 20 years time when I want to fully retire? How much do I need? Okay, I need this amount of money. What if I don't have a big contract that can give me that money one time? Can I start saving it gradually towards that point? Sure. And that is the way I tell people about retirement. Instead of looking at it from the perspective of pension, look at it from the quality of life you want to live after you don't have energy anymore. Do you want to be that person that can, your grandchildren come around and they are so glad to come around where you are? Or you want to be that grandparent that the grandchildren hate to come and visit you because your house is not really nice and all of that. You want to be that person where your grandchildren say, can we go and visit grandpa or grandma because I want to be able to ride the horse in grandma's house. That's the kind of life you want to live. In Maldives, I'm sure you want to live your best life when you're there. It's not going to be cheap. It's not going to come at 2 naira. So do you want to start saving now, or you want to just hope that I'm alone, or you want to be one of those people that, I know all Nigerians have thought about this. Every single person watching this, and I'm sure you too yourself, you've thought about this at one point, that you just be walking on the road and you just kick one bag,
oh, God.
And you just look at the bag, you'd have be like, oh my God, what's inside this bag? Let me open it. You just open the bag and you just see dollars and you be like, hey, how much? Yes, I know we've all thought about it. But the thing I always tell everybody is that, why would the bag be waiting for you? Are you the first person to pass that road? What about the people that passed before you?
God sent.
How are you so sure it's true? Okay. All of us are waiting for that bag.
Mr. Tunji, would you be going to Jos alone? Because, are you going to Jos alone? I mean, your families are they ready to go with you? Because I am retiring in Jos though. I ain't retiring in Jos. What the heck? Sorry.
So here's the thing, right? My family is moving to the UK.
Okay.
So they will decide where they want to. I have decided my own. If they want to come with me, fine. If they want to stay wherever they want to stay, fine. The idea is that let us have enough money for us to be able to retire as we like. If they want to retire to Maldives, fine. If you want to retire to Budapest, fine. But we must have that money set out so that everybody can live their best life. But that money will not happen by mistake. It will not happen by magic. It will not fall on our head. We will not kick it on the floor. We must save it gradually, and that is what we're trying to do.
Okay, should I start? I hope you're already learning your Hausa and everything, because
yes, I love it. Have you been to Jos?
I haven't, because we read online about the insecurity in this country. It's alarming.
Okay, yes. Those things do happen, but honestly, do something, and this is a favor that you need to do for yourself. Visit Jos at one point or the other in the next 1 year or two. The air is beautiful. The weather is beautiful. Jos is, I've been to parts of Europe and you kind of just feel that Jos is, if it was just made to look, the way you want it, you would not know you are in Nigeria. It's beautiful. It's probably the most beautiful part of Nigeria, by far. The most beautiful weather, the most beautiful air. It is clean. This is Jos.
I will definitely do that. I think you're really selling that to me. Like this, I hope this is one of my maybe last questions. Stanbic has a long-standing pension fund operation that seems to have a very credible management. How is Awabah competing with that?
We're not competing. We're partners. Stanbic is one of our partners. We're working together to build micro pensions, but they are not our only partners. We're working with multiple pension fund administrators to be able to create this. So Stanbic is one of our biggest partners in this micro pensions push. You'll be hearing a lot more things we'll be doing in collaboration going into the future. The reason why we've not made so much noise is because there's some regulatory conversations we need to have before we can do that. But yes, we're not competing, we're partners.
And your competitors, what are you doing better than them? Why should I come to Awabah?
As of today, we do not have a competitor.
Goes!
We do not. It's a good place to be in, but as of today, we do not have competition.
All right. Thank you very much, Mr. Tunji Andrews. You know, I'm a fan. Always a fan. Thank you for being on the show with me. I hope that you had fun, because me, I had fun. And I'm going to consider visiting Jos for a few days. Don't worry, you'll be my next of kin. In case I'm ready to pay that, what's it called? No, not the pension one. The kidnapping thing, in case, God forbid, ransom.
No. I honestly must say this. Jos is safe. Jos is beautiful. I've been there a number of times. It's beautiful. It's safe. And you know, the fantastic thing is, we went out clubbing every single time, and we didn't go with any security. So the noise is exaggerated, but yes, I tell you, Jos is beautiful. Visit Jos.
Wow, I will be visiting. Thank you very much. You know, I mean, I don't sound very convincing, but I hope you get it.
It's fine. It's fine.
Guys, I had a very good conversation with Mr. Tunji Andrews. I mean, I don't know where you want to retire, but me, he said he wants to go to Jos. I'm definitely going to the Maldives. I mean, anyway, that is it on today's. That is it on today's episode of Awabah Nigeria, girl. If you're just joining me, of course, you're not just joining me, because I'm sure you've been listening and you've been watching all this while. We talked about retirement and pension fund. Please do something about your future. I hope I will do the same thing with mine and start to think long term, start to think future, not the urgent 2K and okay, let's live for today and not worry about tomorrow. I'm worried about tomorrow now. I'm not just about buying the fanciest thing, the newest iPhones. I hope that life treats us better. Okay, don't forget to follow me on social media, helen.love.23, okay, helen.moang, M-O-A-N-G, and subscribe to my YouTube channel, like, comment, share. Podcast is available on all platforms. My name is Helen. I will see you next week.